Hi everyone, and welcome to our video lesson. My name is Instructor Oliver, and today we will be discussing disability insurance. So let's begin. What is disability insurance? Disability insurance, also known as DI, is a form of income protection that pays you a portion of your monthly income if you can't work because of an illness or injury. The level of income replacement that a plan offers and how long a person might be able to get payments varies from the type of disability insurance. There are three types of disability insurance: short-term disability insurance, long-term disability insurance, and Social Security disability insurance, which we will discuss in another slide. How does disability insurance work? When an individual is unable to perform their normal job duties because of an illness or other condition, whether it's permanent or not, disability insurance replaces a certain percentage of their gross monthly income. It won't completely replace their pay, but it provides enough so that they can afford food and other basic necessities without drastically changing their lifestyle. Like other insurance policies, the individual would have to pay a monthly premium to keep their disability insurance policy in effect. If something happens and they cannot work, they can file a claim with the insurance company so they can receive a monthly payment, which is called a benefit. The benefit amount varies by type of plan, but it is generally 60% or more of the individual's gross monthly pay. Benefits will pay out for a certain length of time, called a benefit period, and their benefit period depends on the type of plan they have. Disability insurance versus workers' comp. Workers' compensation is covered entirely by an individual's employer. Unlike disability insurance, which can cost a couple of $100s per month in premiums, an individual doesn't need to pay anything for workers' comp. However, there are two important reasons to consider disability insurance in addition to workers' comp. Disability policies cover an individual regardless of where or how they sustained an injury, as long as they meet the policy's definition of a disability. But workers' compensation only covers work-related injuries and illnesses. Most disabilities happen off the job and therefore wouldn't be covered by workers' comp. For example, disability insurance would likely cover injuries from a car crash if they keep the individual out of work. But workers' compensation would not cover the individual unless the accident happened as part of their job. All disability insurance policies have what is called a definition of disability, which explains the conditions you must meet in order to qualify for a benefit payment under the specific plan. In general, an injury or illness will qualify the individual for disability insurance benefits if they are either mentally or physically unable to complete their job, or if they have an impairment that substantially limits their ability to carry out basic life activities. If they have to self-isolate, for example, due to the coronavirus, COVID-19, and cannot work, they could qualify for disability insurance benefits in this type of circumstance. Also, disability insurance does have exclusions. Certain policies come with riders that specifically exclude certain conditions from qualifying an individual for benefits. These conditions are called exclusions. So an exclusion rider varies by insurance company, but in most cases, pre-existing conditions are often considered an exclusion. There are three main kinds of disability insurance: short-term disability insurance, long-term disability insurance, and Social Security disability insurance. Each type provides essentially the same service, but there are differences in the cost of the policy, the benefit period, and where an individual can apply for a policy. Also, certain states offer their own disability benefits. So let's take a look at these. So short-term disability insurance. Employers typically offer a short-term disability benefit to employees for free or at a low cost. They can purchase a policy separately, but they're usually prohibitively expensive. It's around the same cost as a long-term policy, despite the difference in benefit periods. Short-term disability has a waiting period of 1 or 2 weeks, and it provides income replacement of up to 80%. Benefits usually last 3 to 6 months with a maximum length of around 1 year. If an individual suffers a long-term disability, a short-term policy will usually expire before the long-term plan kicks in. The next insurance would be long-term disability insurance. Long-term disability insurance may be offered through an individual's employer as a group coverage, but these plans don't offer much coverage. More comprehensive plans are available for purchase from an insurance company. Long-term disability benefits can last 2 years, 5 years, 10 years, or even until retirement. A policy usually costs about 1% to 3% of an individual's annual income. Long-term insurance may be better for most people than short-term. Benefit payments last longer than short-term disability insurance. It's easier to qualify for benefits, and a policy provides larger benefits than SSI, which we're going to talk about now. SSDI, which is Social Security Disability Insurance. This insurance is provided by the federal government through the Social Security Administration. An individual can only qualify if they have paid Social Security tax for a certain length of time, but it's notoriously difficult to qualify for SSDI benefits. Social Security Disability Insurance has a very strict definition of disability. An individual must be totally disabled compared to partial or occupational definitions. According to the SSA, so Social Security Administration, more than 70% of all Social Security disability insurance claims were denied in 2017, and that number has been increasing. Even if a member qualifies or an individual qualifies, it can take nearly 2 years before they can start receiving benefits. Many people also won't be able to cover their needs because the average monthly SSDI payment is less than $1,300. At least that's what it was in 2020. So if an individual's total income is more than $25,000 for the year, they may also have to pay tax on their SSDI benefits. Overall, Social Security disability insurance is only a safe bet if an individual can't afford long-term disability insurance. Then we have state disability insurance. Some states offer their own disability insurance programs called temporary disability insurance. These short-term programs are only available through the state, and they're available in addition to the types of disability insurance explained earlier. So there's 5 states that currently offer temporary disability benefits, and those states are California, Hawaii, New Jersey, New York, Rhode Island, and Puerto Rico also offers some of these temporary disability insurances. This concludes our video lesson. Thank you for joining. I hope you enjoyed the topic discussed today, and have a great day.